Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about Bitcoin and what we might make of this rally. Can it go further? And what it might mean for the broader context with Bitcoin. So I made a video back last Sunday on the 8th, which was right around here, right before this big rally took off. And in that video, I said the conditions were lining up for this kind of thing to happen. The stock market was starting to look like it might go on a bit of a run. And I said, don't be surprised if Bitcoin sees some upside. It looks like, I got that, in this case, got that 100% right. Here we went, shooting out to the upside. And we actually are at about the point where I expected this rally to start petering out, or to start at least having to take a break before it can go further. We talked in that video about there's a lot of on-chain data to suggest that there should be resistance up here in addition to all the technical resistance that you can just see in this chart that should exist up in this kind of 21, 20, 19K kind of general region. So what I want to do is give an update and talk about some of our models that we have here in the channel and what they're making of these price movements. And if we think the rally really does have more room to move, in light of these events, or if it really might cap out like I thought back, at the beginning of the week, right around this area. So let's go ahead and talk about it. So I want to talk first about the UDPI, our risk model we have here at the channel. So if you're not familiar with UDPI, basically it quantifies risk. So this is it for Bitcoin. So we have the Bitcoin price chart here. Color code is the output of the risk model. So 5 up in the red is high risk, green down towards -5 is low risk. And see, it does a really good job of quantifying this risk across the different market cycles. It's good to be accumulating down here, good to be selling up here, for example. So this is the long term I'm showing you first. This is a more macro focused model. It cares what moves that play out over months to multiple months. And we can look at the raw level to see a little bit more clearly what is going on. So more recently what we've been doing is we've kind of been behaving like we have towards the bottoms or the low points of prior bear markets. So we've got down all the way to around -4 and just kind of hung around that general kind of -4-ish level, with some volatility bringing us up, with the FTX collapse getting us back down around to that level. Before then it was down in June, right around June of 2022 that we had gotten down there the first time. But this kind of behavior is what we've seen in the past. And so when we're looking at this most recent rally, it really just kind of looks like the volatility that we saw in something like back here in the 2015 bear market, which I've actually said before that, if you're going to compare this bear market to either the 2018 or the 2015, it's my opinion that this bear market would be more likely to play out, if you had to pick between the two, more likely to play out more like 2015 rather than 2018. And the reason for that is just because with all the egg that FTX put on the face of the crypto market, with basically the body blow that the market took with that and the blow to credibility with the public and institutions, etc., I think it's probably going to take a while for crypto really to recover to be able to put up, a meaningful, big, explosive move to the upside. To say nothing of broader markets and the macro situation also having to get more positive for that to happen. And so that's where this has kind of been my base case. Now, you can look at this and say we've already done some of that work, right? We've already been kind of chopping sideways for a while. But I think it's reasonable to think that more of that could come. And so even in a scenario like that, you are likely to see volatility. You are likely to see these moves. We saw some pretty massive rallies in Bitcoin in this bear market. People don't talk about it, but Bitcoin rallied over 100% different times in these rallies in the middle of this kind of accumulation zone before the next bull run. So that's really what we're entering into, is maybe some kind of extended accumulation zone. Still too early to know that for sure. I think it is still possible that we are going to see a new low sometime later in the year, especially if a recession hits, things like that. I think that's very much could be in the cards. But putting that aside for now, if we just assume that we're going into something like this, I think we still could have further to go in 2023 before we end up maybe being able to break out to the upside. So this kind of rally that we're seeing is very much in line with what we'd expect in something like that. And even if a new low is coming, it's still not unreasonable to see something like that. So there are a lot of people who are being very quick to call, the FTX collapse, going down into the 15K range as being the bottom for the market cycle, and that now it's generally speaking going to be up from here with just a lot of volatility. I think it's still premature to be claiming that. I think we need to be a little bit careful, not get ahead of ourselves. So it's great to see this rally, certainly, but it's not a guarantee that we're out of the woods by any means. Now, if we're going to talk a little bit more about just this rally itself and put aside that kind of broader conversation for now, I think it's useful to look at the short-term UDPI. It cares about moves that play over days to weeks to get a better sense of where this rally might be expected to peter out. And so you can see that we've rallied up to a little bit below -1. And so if we're looking at this in comparison with recent history at kind of these lower levels, we're generally speaking kind of at a level that would make sense for us to start hitting resistance. If we rally up a bit above -1, then I would expect this to maybe be about as high as we can go before having to correct or at least start consolidating in a more sideways way to let the short-term UDPI cool off, reset itself. But if we can clear above that and get up towards 0 or 1, that would be about as far as I think would be realistic. I think it would be certainly plausible for us to get up here, but if we did, I would not expect us to go off and do something like this or something like this that we did in 2019. I think that's just a little bit getting ahead of ourselves to think that we can realize that upside potential. The model says that upside potential is there, but to actually realize that, if we just look at prior bear markets, it's not a common thing to just always be doing that, right? If we look at these prior bear market behavior, especially during this kind of zone, you see that we really did not get very far at all in 2015. We've actually already outperformed that in this kind of context. I think it'd be unlikely for us to get back up here. So what I'm going to be looking at is I think we either roll over right around where we are or kind of start chopping sideways right around where we are, or we get another breath that takes us up to about this level, and that's about as far as I'd see this relief rally going before we need to, at the very least cool off for a while, if not have to retrace a bit. And then you'd hope to be finding to build a bullish case is us setting in a higher low once we do that from the lows back here. So that's just what I'm seeing. Obviously it's not what everyone wants to hear. Some people just want us to be going off to the moon, but I think we need to be realistic. And I think realistically speaking, this kind of general level in the short-term UDPI is probably all that we can really hope for. So there's still room, and so I still think it is very much possible, especially if the stock market continues to rally, things keep looking favorable from that perspective, that we do end up doing that, which might actually end up taking us to some of these higher points from back in this range, maybe up into the 24, 25. Who knows? Maybe even be able to break up above that. But I don't think we can go a whole lot further. I think any kind of move like that would easily get us up to this range, where I think cooling off would then be more necessary. So not financial advice, from your own opinions. That's just my thinking right now. So I also want to talk about the momentum bias indicator, or MBI, because I think this gives us another thing that I think is going to be important to watch from the macro perspective with Bitcoin. So as the name suggests, momentum bias, it's looking at momentum. So when you're in the green and you're spending a lot more time in the green than the red, that's bullish. That coincides with bull market behavior. More time in the red than green is bear market behavior. And then you'll get this kind of oscillation around zero, which I've talked about many times in the past, during these transitions out of bear markets into bull markets. And so what we're looking at right now is we've actually managed, for the first time all the way since March of 22, we've managed to go ahead and get back into a positive momentum bias. I think that's a pretty massive deal, because look at how much we had tried twice here and here to reestablish positive momentum and failed both times. And both times, we got rejected, and then this time we actually went in and set in a new low. And so what I would really like to see Bitcoin be able to do here to make me more confident that we might be entering into this kind of range instead of just being, before the ultimate bottom, is if we can really start showing that oscillation behavior. If we can start oscillating around zero, kind of come up here, spend some time up in the green, dip down, up, down, in kind of roughly even oscillation around zero. That would give me more confidence that we're in this kind of a phase and not just ready to go and set a new low. If we get rejected again, like we did here, poking our head up above zero, but then just get rejected to the downside, I would actually expect, at absolute best at that point, a retest of the lows down here. At worst, setting in the new low in that type of situation. So it'll be important to watch this level, and I'll be giving updates about that as this develops. And if this rally can continue and can keep us up in this range, then I think this kind of behavior is more likely. If we get rejected, go back to the downside, watch out below. I think we are easily going to be retesting these lows, if not worse, in that kind of a scenario. So obviously nothing's guaranteed, but that's my thinking looking at these data. So the final thing I did just want to talk about here was the market direction classifier, or MDC. This is our trend indicator, one of our trend indicators we have here. And if you're above this yellow line, the critical level of the MDC, that's bullish, and that means that upside is likely to follow. If you're below this bearish, downside likely follows. So you can see that except for a few relief rallies, we've mostly just been hanging out in the red this entire bear market. But now we've gone and flipped into the green. And so, so far so good, right? The MDC critical level right now is about 17.9K. We're well clear of that right now as I record, being above 20K. And so what you're probably going to see is this level start to eke its way up towards price, as price is up there. MDC is probably going to require Bitcoin to continue showing strength to remain bullish on it. But so far, we're well above it. So from this model's perspective, having a bullish disposition is still reasonable. Only if we lose this level do we think that a bearish movement might happen. And of course, that would be quite concerning if we lose this level, because in the past, losing that level oftentimes has led to new lows. So we really do not want to see a flip bearish again on the MDC. Again, the critical level it's watching is 17.9K. So we still have some room, but something that we'll want to watch. So to kind of wrap up my thinking then on Bitcoin in this rally, I think we've had some very impressive move, but I do think that we're getting ahead of ourselves right now. This momentum is pretty ridiculous, and we can see that also. We just look at the RSI being a very popular momentum indicator. We hit almost 90 with this run, which actually, if we look back, the last times we've gotten even close to that level was actually back in the mania phase of 2021. You can see on the daily RSI just how ridiculously overextended this got here. And so generally speaking, when you get to that extreme of a level, you're going to have to spend some time soon cooling off. Not necessarily immediately, right? You can get to those levels and still run up a bit more. But generally speaking, you're going to be finding some kind of a ceiling, at least some kind of like slowing down behavior coming off of that. So that's what I'd expect here. I do not think it's likely that Bitcoin just does a repeat of this again and then just explodes, up all the way back up to, above these levels, or especially back up to these levels. I think we're going to need to spend some time, maybe even have to come retrace, try to set in a higher low before we could think this rally continuing. And really, I think it's also very plausible we just spend some time going sideways from here. But again, what you're going to watch is, can we set in a higher low, or do we just come back down here into these lows? And I think if we come back down into here to these lows, that's quite bearish, and that might mean we actually break it and set in a new low. I think that's very much on the table if we do that. Whereas if we can establish some support, rebuild kind of this 19K level as support again, that might be more data in the side of this maybe forming this long-term accumulation zone to set the stage for a new bull run in the future. So overall, I think there is some more room we could see with this rally, not necessarily immediately, but what we could see, the short-term UDPI, I think there's more room we could run. But I think that it's getting ahead of ourselves to say this is a guarantee of the bottom. I think we're going to need to see more price action before we can become more confident in that. All right, so not financial advice. You form your own opinions. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates for indicators and more over there.